Alibaba stock, or BABA shares, are surging higher today, causing investors to wonder, is this finally the bottom for Alibaba stock? We're going to cover all that and more, as well as where can Alibaba potentially go in the years ahead. So if you enjoy educational investment videos, please make a point of hitting that thumbs up, hit that subscribe button. You're watching Unrivaled Investing. So let's do a quick recap of what's been going on with Alibaba. You look at their results, the last 3 years, beautiful ride. Wait a second. No, it's been awful. Lost around 70% over the last 3 years. Since IPO, it's also underwater. So this has been an awful journey for most shareholders. And the turning point for where things got worse was when Jack Ma started spouting off right before the Ant Financial IPO, calling the regulators a bunch of old men. And then that got pulled. Alibaba quickly lost several $100 billion in value. And then it turned into like a Where's Waldo where is Jack Ma? Where is he? What country is he in? Has the CCP made him disappear? And then you start seeing other concerns as well. You saw JD growing a little bit faster. You saw PDD, another competitor, an e-commerce player in China, growing faster. The worries about, are they taking Alibaba market share? Then you see, an overhaul in the business. So Jack Ma leaves. You have this little bit of a power vacuum. Daniel Zhang, he comes in. Then recently, folks aren't impressed with his results. So Joe Tsai, he comes back. He's one of the founders with Jack Ma. Daniel Zhang, he gets demoted to the cloud division. Then he's like, I quit. And so it's like, okay, are they not going to be able to turn around their cloud segment? What's going on here? But let's actually look at the fundamentals, because, a large part of what happened, since I very first covered this, is this previously was growing very nicely. And then, you had severe lockdowns, you had real problems that ultimately caused, the business, including competitive missteps, including the CCP putting pressure on them, where they just weren't growing at all. And that included macro pressures as well. And so, they were actually shrinking at one point. So it went from a growth business to a, how do you value this thing? Because it's shrinking, where is actual deep value for a company like this? And so now looking at the results, they're actually looking at the fundamentals. The most recent quarter, they're posting solid growth. And it's not just solid growth in one segment. It's almost across the board. 14% sales growth. You see 12% growth in their core legacy business, Taobao and Tmall. This is really important because this is where most of their profits come from. We'll talk about that in a second. You see their international business up 41%, local services 30%, logistics 30% plus. Cloud continues to stink. Cloud's a stinker. Their digital media business, 36%. So, not surprising to see the management turnover with cloud. But overall, sales very strong here with Alibaba in their most recent quarter. This is the type of results that you would need to see a turnaround in this stock. You look at their profits are also getting better. Their adjusted earnings before interest, taxes, and amortization up 30% year over year. This is definitely the type of thing, investors could see and then go, well, wait a second, why is it traded at this low multiple? Their core Taobao Tmall up 9%. The vast majority of their profits coming from this one segment. And by the way, their other segments, their cash burn is getting better. Local services, much better losses than they were, prior quarters. Looking at their logistics, now at a profit. It's been struggling for profitability. You're looking at cloud, it's about the same, a little bit better. Digital media and entertainment, no longer a loss. This is fantastic. A fantastic, improvement in terms of efficiency of this business, in terms of managing their costs. So what you're looking at now with Alibaba is this, empire of assets around the world, predominantly in China, but around the world, international e-commerce assets. And they're taking a big hammer and they're saying, we are going to break this up. We're going to figure out, because the stock price, the CCP might limit how much we can do in buybacks. If this were a U.S. company, I suspect they could really amp up the buybacks. But as it's not, I think there's a limitation for how much they can do. And so they're saying, well, we need to unlock value somehow. And the way we're going to do that is by split this sucker up. And so what you're looking at is them considering different things. And, hey, maybe we, IPO our grocery business. and they were hoping to get a closer to $6 to $10 billion valuation. Market says, no, sucker, that's probably only closer to $4 billion. So they say, okay, we'll wait until the market's a little more excitable. But hey, maybe we can move in on our logistics. And so we're going to start raising, billions of dollars with our logistics IPO potentially in the, Hong Kong. So you're looking at this business is slowly but surely going to get peeled apart. So investors realize, wait a second, there's potentially a lot of upside here. There's potentially a lot of value here that investors might be missing. So the question is how much? First of all, in full disclosure, this is not financial advice. Also, quick plug, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for premium annual subscribers. I'm going to be raising the rates shortly, so now is the time to lock it in. So looking at just their Taobao Tmall segment, that one segment that generates the vast majority of their profits, ignore everything else. You're looking at, Alibaba, around a $200 billion US company, 1.6 trillion RMB. This one segment is arguably worth somewhere between 100 and 200% of the current market cap of this business. I'd argue it's worth more. I'm taking a conservative estimate just of their current results. I'm slapping on a 15 to 20 times earnings multiple just to this one segment and saying, oh, just based on this, there's 40 to 90% upside just for this one segment. So my personal view is, there's a lot more value here because this is just one segment. So you have to think, okay, so I'm starting with Taobao and Tmall, and what else do we have? Now, keep in mind, this is a hypothetical valuation framework. Stock price can go way higher, way lower, but I think it's an important data point to think about, well, what more, is Jack Ma hiding here? He's no longer really involved, but, what more do you have here? So you have the buyback that's actually starting to kick in. You're seeing them reducing shares to the tune of about 4% a year. That's favorable for shareholders. That means if they do nothing, if they don't even grow, your value in the company is growing to the tune of 4% a year. Then you overlay growth. Now you're actually looking at some sort of turbocharged story. Next up, you have about 25% of their balance sheet in cash that they could, relative to their market cap, 25% of their market cap in cash. They see, that's why I keep going. If this were a U.S. company, like a real U.S. company, they could do a levered buyback and it would be bananas where the stock would go. But I suspect the CCP is saying, hey, we don't want you returning all this cash to international shareholders. You have to figure out another way to unlock value. Either way, that's a monster cash balance sheet that I like to see. Another thing, you look at all these different segments. I'm not even going to value them all, but they should be worth something. Even if they're not significantly profitable yet, they're clearly worth billions of dollars that would get added to the story. The grocery store IPO that they're talking about, it's $4 billion as opposed to $10 billion. That's still $4 billion real value that would accrue to Alibaba shareholders. You also have their Ant Financial stake. That was the thing that caused all this trouble to begin with. That's been marked down to like 70 or $80 billion. They have something like 30% plus of it. So still tens of billions of dollars that you'd add to just the Taobao Tmall that, I'm effectively saying, yeah, easily pencils out, 40 to let's say 90% upside. And so that's just today. It doesn't focus on the free cash flow, doesn't focus on breaking up the business, doesn't focus on their Ant Financial stake, doesn't really give them any credit for potentially winning in the future. But there is real geopolitical risks that investors should be mindful of. Just earlier this month, you had 103 Chinese warplanes circling around Taiwan, which is the most ever tracked in a single day. There's a reason that you look at Warren Buffett, one of the greatest investors of all time. He was buying Taiwan Semiconductor, buying a basket of Japanese stocks. Quarter or two later, he blew out of Taiwan Semiconductor because he made a comment he didn't like the neighborhood effectively, where he was concerned that you could have a change in rule because of, China's strong desire, the CCP's strong desire to peacefully reunify with Taiwan. Very skeptical of the peaceful initiatives. So that's the concern that you need to, work with, is that you're dealing with, one investor, friend of mine who prefers not to be named, but when I first mentioned China stocks to him, he said, you want to get in bed with some CCP killers? He's not wrong, especially when you see the actions that have taken place over the last few years. So I think that's important for investors to consider. So that's why on this channel, I try to give you an unbiased, no hype take of what's going on with the business. Here are the fundamentals. Here are some external risks. Here are some external, things that might drive the company higher or lower in the future. In this case, the macro story became significantly worse that I didn't feel comfortable having this as part of my own investment journey. There are other things where I think have comparable upside without that sort of, heartburn that I call out to my subscribers at unrivaledinvesting.com. But if you're an investor and you say, I think the CCP risk and the peaceful reunification risk is actually not significant. I mean, look, there are smart investors, smarter investors than me. You have Charlie Munger, making a bet on Alibaba. So he's made a call on it saying, hey, it would be epically dumb to sort of disrupt the world order and world systems. So I'm going to bet on continued peace, and I'm going to bet on a cheap, Chinese stock, Alibaba. And to that point, it wouldn't surprise me if he still makes a lot of money on it. It would not surprise me if Alibaba does very, very well in the years ahead. Would not rule that out. But there's a little too much heartburn with some of these macro factors that make it too hard for me personally. That's okay. You don't have to catch everything, that goes up, 100%. I actually, I just called out to my subscribers that I was selling off the final bit of a position that was up, over 100% in the last 2 years that I called out to my subscribers. And it's like completely unrelated. It's a company called McKesson. And, it's one of those things where it's something that nobody was talking about. It was something that just struck me as cheap. And so, look, every investor, you need to figure out what's right for your own investment journey. And, if you ultimately find things that you're comfortable with, then you're more likely to sort of ride out the highs and lows. If you're sort of tackling and gluing someone else's approach to your own investment journey, that can be a problem. And that's why with my weekly letter, I'm sharing like, hey, here are my thoughts. Here's what's going on. You decide for yourself what you think, if this is right for you. Because if you try just, bolting on someone else's approach and it doesn't actually jive with who you are, then there's a good chance you get, taken out when there's a point of weakness, and maybe even buy when things are really ebullient and things are, jumping higher. So, it's a very important for you to figure out what type of journey you want to have. And I encourage you to explore your journey, at unrivaledinvesting.com for potential ideas, if that could be helpful for you. And I hope this video has been helpful. Talking about Alibaba, I certainly think it has tremendous upside. Hopefully the CCP doesn't sort of blow it up for all investors. We'll see. Thanks so much for tuning in. You've been watching Unrivaled Investing.